Good morning. It's Jeffrey Christian of CPM Group. It's about 10:25 in the morning here on Monday, the 21st of September, 22nd of September. I'm actually recording this for the 23rd of September because of our scheduling. I want to talk about why gold and silver prices would ever fall in the future. It's a subject and a question that keeps being asked of us, and it's a longer-term view. I think it's pretty good to do it today because we're at a new record gold price over $3,700 this morning, heading toward $3,800. And silver prices are also up. I'm going to run through the markets very briefly. And I'm going to start with silver and end with gold because I want to talk about this whole issue. And of course, the focus is primarily gold because that's where something like 85–90% of the dollars spent on precious metals investments goes into gold as opposed to silver, platinum, or palladium. Gold prices or silver prices this morning for the December COMEX contract were about $43.74 at 10:05, 20 minutes ago. They had gotten over $44 earlier this morning, and they've come back off. Our expectation is they're going to continue to rise. We probably will be issuing a trade recommendation to our paying clients on our ultra short-term view on silver later this morning or tomorrow at the latest. And our view basically is you don't stand in front of a runaway train. A lot of people are talking about how gold and silver prices look overbought, but given the impulse in rise in prices, we don't necessarily suggest that anybody stand aside at this point. Talking about the sharp increase in gold, silver, and palladium prices this morning, we're discussing what the factors were that may have stimulated the demand overnight in Asia, continuing into this morning. And there was no one economic indicator or political development that we could identify that was the trigger for this. What we did see was an overall angst, if you will, over the state of the political and economic and social and financial market. We've seen interest rates fall. We're seeing inflation remain high with some inflationary pressures there. We're also seeing unemployment rise and employment and new jobs creation fall, not only in the United States, but on a global basis. We're seeing signs of economic deterioration. You're seeing signs of economic overheating. And then there's a tremendous number of political issues, big international issues like Gaza, and the recognition of the Palestinian state by Canada, the United Kingdom, and Australia, and pressures on the United States. The Ukraine-Russian war continues. Russia has sent drones over Poland and Romania and fighter jets over Estonia in the last 2 weeks. Russia is clearly trying to drive a wedge between the United States government and the rest of NATO, because the rest of NATO will say, hey, this is a violation, and the Trump administration will back off. If they're going to impose sanctions, it's not going to be on Russia, it's going to be on India or China or somebody else. Putin has demonstrated that Trump will not put the pressure on Russia that's needed to end the war. The same way that Netanyahu has demonstrated that Trump will not put the pressure on Israel to end the war in Gaza. And those are two really big problems. There's also some issues and some discussion related to China's relationship with Taiwan once again. And then there are all sorts of domestic issues, primarily in the United States, but you also have problems in France and a number of other countries. And those factors are not going away. And in that environment, investors have been buying gold and silver, and one should not stand in the way of that upward movement of prices that's a result of all of that until we see some calming down. So silver prices testing $44, headed higher. Platinum prices also have risen, not so much this morning, but they've gotten back over $1,400. Again, the dynamic in the platinum and palladium market, especially the platinum market, is going to be for investors who hold several million ounces of platinum, who had been selling platinum in the period 2011, 2014. And when the price fell below $1,400, they stopped selling. They said, we're going to wait until we see the price over $1,400, and we're going to reassess our view of platinum. Why has the price of platinum risen, having spent from 2014 to May of this year, trading between $800, $900, and $1,100? Why is it now rising back up to $1,400? If it's a temporary thing, we may resume sales. If it reflects a fundamental change in the long-term outlook for platinum, we may actually start buying again. The reality is that it seems to be a short-term phenomenon. It doesn't necessarily reflect shifts in the fundamentals of platinum. It was stimulated by a marketing report that talked about deficits that don't actually exist, bogus estimates of enormous amounts of platinum being bought by investors who were not actually buying it, bogus estimates, or not actually estimates. The data was correct, but the analysis that there was this massive surge in platinum imports into China was not accurate. There was a big increase from a very low level of imports in January to normal levels in April and March. But if you looked at the April and March imports in June and July since that time, they're basically in line with last year's imports. So there's a lot of marketing hype that caused investors to spike platinum back up to $1,500. And the price did come off and give up half of that, but it's now rising back, partly because of concerns that there could be a disruption in Russian platinum and palladium supplies due to the political situation, and also continued weakness in South African production due to high costs and other constraints in the platinum industry in South Africa. Palladium prices have risen sharply today. They're back over $1,200 as of 10:06 this morning. Again, our expectation is that they would basically trade between, say, $900 and $1,200 over the next few months. And then there's gold, which, as I said, reached a new record. It had come off a little bit by 10:06, but it was trading at $3,757, probably $100 higher than it had been last week at this time. A lot of strength in gold prices. Again, our view is a lot of people think it's overbought and due for a correction, but we would not advise ultra short-term investors to stand in front of a runaway train. We wouldn't necessarily advise investors to buy $3,750 gold. We might, longer-term investors, we might advise them to wait till the price falls back, but we don't think it's going to fall back sharply. And that goes to the subject I want to talk about, and the title on the cover page. Why would gold and silver prices ever fall in the distant future? And we've showed you this chart. This is actually from a September 2022 report where we had platinum or silver nominal prices going up to about $38, $40 an ounce. If you go back to 2020, our long-term projection was that the price would top out on an annual average basis around $50. Right now, the annual average, even with today's price, the annual average is probably around $35 an ounce. But you can see from the blocked out section, or just before the blocked out section, in silver and in gold, CPM Group has had the price, and we've been projecting for several years that the prices would rise to record levels, at least on a quarterly average basis for silver, if not on an actual intraday basis, and to record levels on gold. And then we had them coming off after 2026, 2027. And one of the questions that we keep getting asked is, okay, you've been very good projecting the upside here. And we have a lot of investors who have done very well by buying gold, at $1,200, $1,300, $1,600, $1,700, with the expectation that the gold price could get to $3,000 to $4,000 around this time, 2025, 2026, and then come off. And what we've seen is a lot of our investors saying, you've been good on the upside. You've projected rising prices into this period of time. You've gotten the timing and the levels pretty good up till now. But we don't think that this is the time to take profit. And the reason we don't think that is because the political and economic and social and financial market conditions that have pushed investors to buy more gold and silver, which has pushed the prices higher to record levels, aren't changing. And so what we want to do is maintain our physical gold and silver positions that we put on, partly with CPM Group's advice over the last several years and over the last couple of decades. But we want to put hedges in place with options to protect ourselves and maybe even capitalize on any downside. Because what the question is, CPM Group still thinks that at some point the prices could fall after 2026, 2027, maybe after 2028 because of the political calendar. The question we keep getting asked is, what is it that CPM Group sees? How do we see things improving 2 or 3 years from now that would be sufficient to drive or allow for the gold price and silver price to decline? What is it that we see? What's the mechanism where it happens? And the answer, first off, the question is telling. The question and the widespread presence of this question, we're being asked this from all sorts of people and institutions around the world. The fact that that question is being asked is very telling because it tells you that people are looking at the political and economic environment and they're saying, I don't see this improving. CPM, what do you see, CPM Group, that tells you that investors will say, oh, I can exhale. I don't have to keep buying as much gold and silver at record prices as I have been over the 6 or 7 years that we will have seen this bull market really starting in 2019. And so the question is very important to be being asked at by so many people in so many parts of the world. It shows you the degree of long-term economic and political and social concerns globally. Now, our answer is that we don't necessarily see things improving. What we're looking at is normalization. People becoming inured to the bad economic and political circumstances. And we've seen that repeatedly throughout history. In fact, it's written into the Declaration of Independence that people will long endure injustices rather than take steps to replace a bad government with a good government. And so it's not so much that we see things dramatically improving after 2027. It's just that we see investors and society normalizing worse economic and political circumstances than were typical prior to the last few years. And that ties in with our long-term view of gold and silver that we outlined starting in November of 2000 about the golden renaissance, where you would see worse economic and political circumstances for decades to come, starting in 2000, but continuing well past 2025, that would stimulate more investors buying more gold and silver at higher prices for a longer period of time in more parts of the world. And that's basically what we've seen since 2000, 2002. And we see that continuing, but the pace may decline a little bit. Now, if things actually did improve politically and economically, and that's not our most likely scenario, you might see prices fall sharply when that starts to emerge. Our view is that rather than seeing things radically improve, you'll see things get worse and then they'll get better, but they won't get that much better. They probably will be worse than they are today. And then in that environment, you would see this normalization of investor expectations and the fact that gold and silver would be at record highs, so that people would normalize their views toward a hostile economic and political conditions, and they would step back a little bit. In that environment, gold and silver prices might decline, but not as much as one would expect them to decline should economic and political conditions actually continue. That's all I have for now. Take care of yourself. Take care of those around you. You can go to our website and buy our gold silver yearbooks. You can buy our platinum reports. You can look at other reports. We do have long-term gold and silver reports that take supply, demand, and price out 10 years in 3 different scenarios. We are updating those on a quarterly basis. The first half of this year has been very difficult because of the uncertainty surrounding what the economic political circumstances really are. That's clarifying itself now. We are seeing more radical scenarios. We run more than 3 scenarios, but we publish 3 of them. We're seeing that some of the more radical projections and scenarios that we previously run, we are not running now, or rather, we've run them but not talked about them. And now the circumstances that are in those more radical scenarios are becoming common currency in public discussion. We are working on completing our 3rd quarter long-term economic gold and silver projections out 10 years. We hope to have them completed next week, and they are available to purchase. And you can always write to us at info@cpmgroup.com and say, I'd like to talk to CPM Group about buying our long-term reports, or buying a package of research and consulting, or having us advise you on very specific investment factors. Take care of those around you, and we'll talk to you later in the week.